On today's Hashi, I'm discussing consumer housing sentiment, the SFR Investor Survey, that's single family residential, and weekly unemployment. Today is Thursday, August 8th, 2024. I am Byron Lazine, and the Hashi starts now. Here we go. Welcome into today's hot sheet as we move past the first week of August and into now. I guess it's still 1 week, the first full week, but August 8th to me. Now I start thinking, okay, week 2, the clock is ticking. We're inside of 10 days of August 17th. For all the real estate agents out there, you know exactly what that means. Glad to see you here as an agent of change, pushing your business and the industry forward. That's what this is all about, making sure we understand both the micro, which you understand the best in your market, as well as the macro. That's why we do the hot sheet each and every single day, live at 9:30 Eastern, 6:30 on the West Coast AM time, Monday through Thursday, every single Monday through Thursday that the markets are open. All right, let me know in that live chat which market you're tuning in from. Hope everybody has had a great week so far. And let's now jump into it. We've got a Fannie Mae report on consumer housing sentiment. It's obviously important for real estate professionals, advisors, anybody dealing with consumers in the industry to understand all the changes that are going on, how to explain those changes, how to connect and really educate as well as inform on your value to consumers. But able to connect at the highest level and able to inform and educate and close that knowledge gap at the best level possible, it's paramount that we understand how consumers feel. What are their current feelings on the market? How do they feel about the economy? How do they feel about the local market that they're living in? All these data points are important so that we can speak to those pain points, so that we can speak to the points that they're feeling positive about, so that we can highlight what maybe people that might be competing with them on the buy side are thinking. What are they doing? Are they sitting on the sidelines? Does that create an opportunity for you? We know that overwhelmingly, most of the younger demographics feel like the economy isn't working for them. When Gen Z and millennials are polled right now about what they're voting in November is going to lean towards, the top of the list is the economy. The top of the list is, am I going to be able to literally afford a home? That's what economy means to many young folks today. Both Gen Z and millennials overwhelmingly want to buy a home. They want to own. They don't want to rent, but the economy is not working for them. Understanding how they're thinking and what their sentiment is around housing is important when we get into different conversations, okay? So we've got the July 24 data release here from Fannie Mae on the HPSI, the Home Purchase Sentiment Index. So this is really looking into buyers. And we went up, or I'm sorry, we went down 1.1. I was very hopeful there. I was trying to go glass half full, but we did go down 1.1 points to 71.5 in July. Okay. That's where we're at right now. We're up from the bottom of 62.8, which was 2022, when those rates really started to increase. Okay. We're not anywhere close to, say, 2019, where we're 93.7. But think about this for a minute. We haven't been in the 90s or the 80s on the sentiment index at any point during the last 4 to 5 years. So even during, I would argue that the sentiment should have been much higher in late 2020 and 2021, where buyers were cashing in on extremely low interest rates, and we're also getting real value because you bought in 2020 at 4 years of runaway prices. Obviously, the sentiment here cannot reflect what happens, but this is how they're feeling in the moment. Why were they feeling close to a 71.5 coming out of the flat in the curve couple of months, and they got back out on the streets and they were buying real estate in 2020, second half of 2020. Why were we very close to the feeling then? Well, because inventory felt scarce. It felt like there wasn't many opportunities in the market, despite there being low interest rate. Today, you've got both of those factors. You've got low inventory in some parts, rising in others, Sunbelt in particular. But you still have this unaffordability that looms over with the high interest rates. So that's really suppressing the sentiment. The most is the fact that it's just so darn unaffordable for most of the buyers to buy. Pat says from Milwaukee tuning in, how about the Rich Barton news? Do I think he'll come on the show? Now, I think there's a better chance that I will get a BAM interview out of Rich Barton now than prior. He is still the co-chairman with his co-founder, Lloyd Frank. So we'll see. Have had Spencer Raskoff on a BAM interview. You can go backwards and check that out. Maybe Bobby can link that up. That's an old one. It's an oldie but goodie. So I think the possibility of getting Rich now is more likely. I've been in contact with his assistant in the past, and we've tried, but it hasn't happened. Maybe to your point, and I'll cover that. I'll get into the Rich Barton news. I put out a couple tweets on X yesterday about it. I'll close with that since Pat brought it up. Don't let me forget that, Bobby. Bobby's back, by the way. Haley did such a phenomenal job yesterday. All right, here are the components of the HPSI. We've got buying conditions. Good time, according to consumers, 17%. Bad time, 82%. Now, the reason why I think this is important for you to know, it's not to, don't look at this number and look at it negatively. Man, 82% of buyers think it's a bad time to buy. Shucks, I can't wait till their attitude changes about the market and then my business will change. No, your business will change when we change the way we think about these numbers and the way we explain these numbers and the way we educate on these numbers. Okay. If I've got a buyer who's like, I don't know if it's a good time to buy. Hey, completely understand where you're coming from. And most people are thinking just like you, right? In fact, 82% of buyers right now believe it's a bad time to buy. It's why we've seen days on market in our market here go up gradually, because more and more buyers are dipping out of the game. They're sitting on the sidelines. They're taking a little time away. They're taking a break because a lot of people feel just like you do. 82% say it's a bad time. When those rates go down, let me just ask you, what do you think is going to happen with consumer sentiment? Do you think the bad time and the good time are going to flip when those rates go down and those buyers are going to come off the sideline? Let them answer that question. They're going to give you the obvious answer. Well, yeah, I guess that's right. So why wouldn't we be somebody who's stepping outside of the herd, not be a sheep in the market, and go ahead and create our own path, a path that we stay in the game? If everybody thinks it's a bad time and the sellers are feeling that because traffic is reduced, we could actually go up in the price points that we're looking at and negotiate down to the price that we want to be at. Now, we might get turned down 2 or 3 times, but at least we've got feelers out there and maybe some sellers that come back to us later and we score a great deal. Or we end up getting somebody to accept because they're nervous about the economy. Because just like all these buyers, they have a sentiment that maybe isn't that strong. And we're going to have less competition ultimately if we do that. Sellers believe that 65% of them believe it's a good time right now. 34% believe it's a bad time. Okay. Net good time to sell, 31%. All right. Month over month change. Those two numbers are both down. Buying and selling are both down a tick. Home price outlook, 41% of consumers believe prices will go up over the next 12 months. 21% believe it'll go down. That's down 7 points month over month. You know, if you're in the Sunbelt states, you're probably saying, hey, I think it's going to go down based on how many signs are popping up around me, particularly if you look at what's happening in a place like Florida. Mortgage rate outlook going down 29%, going up 31%. We talked about the rates on Monday. I encouraged everybody I talked to on Monday and even on Tuesday to get out ahead of your lender who's going to call for a refi, if the rates keep going down, to get out ahead of headlines and say, hey, did you see what's going on? Do you want to relook at the numbers? I know you've been sitting on the sidelines, and pull them back in because I knew that it was a moment in time. Too often we see, wow, economic sell-off, rates going down, 10-year plummet. Wow, we're going to ride some serious momentum down. Our brain plays this trick on us, and we should know over the last 2 years with how much volatility there's been in the 10-year and the 30-year, that's just not going to happen, okay? Because all of a sudden now we're almost up a quarter point off of Monday's low on the year low. Monday's year low for the 30-year fix. We're already up a quarter of a point on that. So I think sentiments actually think about this a little bit differently, where some of them feel like it's going to go up, some is going to feel like it's going to go down. I think sometimes agents kind of ride the wave of the moment too often. Jeff says there will be no rate cut in September. The economy is showing signs of strength. Well, should I should I veer off of this and just address Jeff really quick? Jeff, love the comment. I tend to disagree. The market disagrees here. Right now, CME Group, this is updated right now, is still calling for a 100% chance that there'll be a Fed rate cut in September. Listen, Jeff, none of us know. I just have never seen 100% chance from the betting market, from the odds here. I call it the betting market. These have been very accurate the last 2 years, and I haven't seen 100% yet. They're calling for 100% chance that it'll drop in September. It's a 35.5% chance that it'll drop a quarter of a point and a 64.5% chance that it'll drop a half a point. That has changed from 75, 25, 80, 20, somewhere around there with today's news, which we're going to cover, which is what Jeff's talking about. Signs of strength. I mean, I don't know if I'd go as far as just today's labor news showing signs of strength. There's been all these data points, certainly the last 2 weeks, that has shown signs of weakness in the economy that we've talked about here. But right now, CME Group has a 100% chance. That's what's being priced into the markets, that there'll be a rate cut in September. Obviously, none of us know for sure, but apparently the markets think that they know for sure at 100% chance of going down. So we'll see what happens there. By the way, the Fed rate cut doesn't necessarily impact the 30-year fixed. It can, but the 10-year has a bigger drive and impact, and we're seeing that this morning. The 10-year, to Jeff's point here, we had a little bit of strong data. We're going to get into that with the jobs report, which bucks the trend of weak data the last couple weeks when it comes to the economy, and you're seeing the 10-year go back up. And that's where I say, this relying on the 30-year to go down. If the 30-year, one thing I'll say about, the mortgage rates here going down, and certainly even in Jeff's point that he made, if the 30-year fix goes down to 5%, that means really bad things have happened. The reason why we're staying around the 6.5 point, because, there hasn't been a economic catastrophe yet. There are a lot of cracks. There are cracks in GDP that are getting revised down. There are cracks in the labor market softening there, despite a good report today that we're going to point towards. Credit, we looked at consumer credit, is way up. We took a look at that yesterday. So there are cracks, but something hasn't completely broken yet, right? We're not at 5% unemployment yet. We're not over 300,000 job losses yet. But there are early signs that we're trending towards that. That's why we saw that economic sell-off here over the weekend, as well as uncertainty in the Middle East, which can drive a lot of fear and all that kind of stuff. Job loss concerned, 77% not concerned, 21% concerned. Change in household income, not much of a change there from the last survey. Okay, there's a whole bunch of these charts. We'll drop them into BAMX so that you can use them, as well as your hot sheet show notes. There's a new code here today, right? What's the code? We're doing a special today. Hot is not the code. No, it's hot 20.
Hot 20.
Hot 20. Is that the code? Look it up, Bobby.
Check with Vanessa.
Check with Vanessa, please. I think it's hot 20. We'll confirm that. If you want to get all of the charts, all of the BAMX show notes, we release these show notes each and every single show so that you can, so many of you chime in if you're a BAMX member, so many of you are copy and pasting these show notes into your database follow-up. These show notes are extensive each and every single day. Here's what they look like if you're seeing the screen right now. using this to copy and paste all the data that we use so that you can communicate with your audience, as well as the done for you content, which comes right out of this. We release social templates every single Friday, as well as blog, email, and video scripts. Use code HOT20, HOT20 to get 20% now off of BAMX. HOT20, it is now scrolling on the bottom. Use code HOT20 to get all of that, and you get all of the charts every single day, courses every single month. It is the most action-packed opportunity you can get in the real estate market right now. Okay, so going, there you go. Justin's member. Thank you very much, Justin. There's a little bit more on this. Employees who are concerned about losing their job in the next 12 months, most not concerned, but there are 21% that are concerned. That's up from just 20 the month prior, but down from a peak earlier this year at 24. So not a lot of fear that people are going to lose their jobs. People feel pretty secure, despite some of the weakening we've seen in the job market up till today, of course. Respondents who say their household income is blank compared to 12 months ago. We're down on about the same. We are down on, or we're a little bit up on net significantly higher, 6% to 7%. Significantly lower, a little bit up, and significantly higher, a little bit up there as well. Average expected percent change over the next 12 months. Home prices down ultimately, and rental price up a tick. Respondents who say home rental prices will go up or go down. Most saying up over the next 12 months, while very few say down. All right, there's how some of the consumers are feeling right now in this moment. That's the Fannie Mae report. You can get all that information inside of BAMX Hot 20 if you want to jump in here today. All right, Resi Club just released a survey on single family rental. I think I said residential earlier. Meant to say rental. Resi Club, in collaboration with Lending One, conducted a survey revealing cautious optimism among single-family rental investors. 60% planning to buy properties, and 76% expecting to raise rents in the next 12 months. Single-family rentals have been one of the drivers of growth for the rental market. Investors have looked at single-family rentals as maybe even a better opportunity than multifamily, because there's been a lot of building of new multifamily. If you want a single-family rental, you're probably not looking at the multifamily. There's less of them. There's less competition. There's more opportunity to raise those rents, and you can get a higher rent, because if it's single-family and most people own, it becomes a rarity. It becomes something that's not common in the market, okay? The Lending One and Resi Club SFR Investor Survey was fielded between June 25th and July 18th. So pretty recently, they got this out here pretty quickly. There was 235 single-family landlords that completed the survey. I would have loved to have seen maybe a little bit more, but that's what they got, 235 single-family landlords. Buying intention, 60% of the single-family landlords plan to buy at least one investment property over the next 60 months. So think about that. 6 out of 10. If you're looking for deals in your market, you definitely want to have friends with investors, okay? 60% of investors right now in your market that already own a single-family rental are going to go out and buy in the next 12 months. They plan to do so. That's where their sentiment is right now. So 6 out of 10. That's like shooting fish in a barrel. You can go on PropStream right now and say, okay, who owns single-family rentals, and call them all. 6 out of 10 are thinking about buying in the next 12 months. Hey, what can I do to serve you to unlock off-market properties? Ooh, you're going to be speaking dirty to single-family rental landlords by saying, I can unlock off-market properties for you. Okay, let's link up PropStream for anybody that wants to jump in and get that data. If you're looking for, well, how do I get in touch with single-family rentals? Well, we've got I think we have a code for them too. Yeah, we've got a code for PropStream. We'll put it into the comments, and then we'll put it into the replay as well. It'll be down in the show notes for anybody listening to the replay. But you just go on source like PropStream, go single-family property owners that aren't owner-occupied, and call them all and have your pitch. hey, I'm helping investors just like you who are planning on buying in the next 12 months unlock off-market properties. Should I put you on my list when I get an opportunity? Yeah. How do you know I was buying next 12 months? Well, all of you guys are. Okay. I've got the data right here in front of me. 60% of you guys are thinking about buying in the next 12 months. I want to help you build your portfolio. I can put you on my exclusive list. I've got about 5 or 6 different, spots left on the list to add you onto it. And I'd be happy to do so. Okay. Keep it an exclusive list. Build out a list of investors that you're educating after maybe doing some circle dialing or mail on whatever you do to unlock off-market properties. 60% of landlords say that they're going to buy at least one investment property over the next 12 months. Question is, are you working with them? 39% of single-family landlords say they'll likely sell at least one investment property over the next 12 months. Ooh, sounds like a double opportunity, okay? 4 out of 10 are thinking about selling. There's listings out there with these investors. 76% of single-family landlords expect to raise their rents over the next 12 months, including 35% say the increase will be over 4%. That'll ruffle some feathers with tenants. That might be something. I might take that number there. 70, and all these numbers are inside the show notes for you guys. If you need to copy and paste this stuff, make it easy on yourself. 76% of single-family landlords are expected to raise rents. Maybe you have a community that a condo that maybe you're trying to invest in this condo. Maybe you're trying to buy. Maybe you're trying to get buyers out of it because there's a lot of renters. You could send this out there and say, hey, if you've been thinking about buying over the next year, this is data shows us that most, your landlords probably likely 76% likely to raise your rent. If you're looking to generate more buyers, that's an angle right there. If you want to get into one of these deals, obviously, you want to go and attack the 40% that are thinking about selling. 2% of single-family landlords expect to decrease their rents over the next 12. So basically, nobody is thinking of a decrease. 72% of single-family landlords expect home prices to increase in their core housing market, while 86% of single-family landlords expect interest rates to fall over the next 12 months. So single-family landlords way more optimistic than the buyer-consumer sentiment, expecting these rates to drop. However, just 10% expect the decline to be more than 1 percentage point. So they're being realistic there with how big they think that they will go. Here's some regions here on how single-family rental investors are thinking about buying over the next 12 months. Midwest leads the pack, where 50% are very likely to buy in the next 12 months, and 21% are somewhat likely. So 71% in the Midwest thinking about buying in the next 12 months. In the Northeast, those numbers get smaller, 39% and 28% respectively. So just a little bit under the total of the Midwest, but more than the Southeast, Southwest, West, and even the national number there. So Southeast, you got 43% very likely, with 22% somewhat. Southwest, 46% very likely, and 18% somewhat. The West is where you have the weakest numbers for single-family investors, current single-family investors who already own. This is them buying another one. You got 19% and 23% in the West. Then again, nationally, you've got 60% overall thinking about doing this. How likely are single-family rental investors to sell any of their properties? Okay. Northeast, where you have the lowest inventory, it's much less likely than the Midwest. Okay. Northeast, you got 17% very likely, 28% somewhat. Midwest, though, 32% and 18%. Midwest, there's a lot of fluidity to the market in the Midwest right now. Midwest has got some opportunity, some price point opportunity. We talked about Ivy Zellman's feelings on the Midwest yesterday, and where she thinks there's long-term opportunities in the Midwest. There's going to be migration patterns shifting to the Midwest, according to Ivy Zellman's thoughts. Southeast, you've got 21% and 13% on the likely scale of selling an investment property. Southwest, similar numbers. West, you've got 15 and 23%. Nationally, again, you've got just about 40% thinking about doing that. How much single-family rental investors plan to raise rents over the next 12 months? Really, all of them in the Midwest, because they're seeing, hey, I've got an affordable situation here. I can keep jacking this thing up a little bit. The Northeast and the West have the lowest numbers, and of course, they already have the highest rents. So that how much more can they gouge? How single-family rental investors expect home prices to shift in their core market over the next 12 months. Midwest, again, leading the pack, and the West is right there too. So home prices, Midwest expecting to move up the most. And then you've got the West behind the Midwest, okay? What single-family rental investors expect to happen to interest rates over the next 12 months? You've got 10% believe it'll fall over 1%. Over 30% believe it'll be a half a point. We just saw a half a point in the last week, and then it, ate back into that gain, obviously. Gain meaning going down. Fall just between 0 and 0.5%. That's the majority of investors feel like this. The decrease is going to be slow, gradual over time. That's what the Fannie Mae projections believe as well. The expense single-family rental investors say increased the most over the last 12 months. 50% say it's the insurance premiums. Insurance premiums are becoming a common issue. Property taxes, 27%. Okay. The other fees were all nominal. So 3/4 came up in insurance premiums and property taxes. There you go. That's your single-family rental investment outlook. The survey out of 235 single-family rental landlords. All right. So the big news of the morning in the economy was the jobs report. Okay. So we had a huge jobs report on Friday, which showed that unemployment went up to 4.3%. Okay. It actually showed, a weakening in the labor market that was much more significant than previously expected. Okay. Today's data comes out and is a little bit more hopeful. Okay. This is the weekly claim, but we were looking at on Friday, the monthly claim, which can get revised, by the way, that those numbers get revised from times. Unfortunately, the last 3 months when we get revisions, they're all worse than the initial numbers, which is one of the reasons we are seeing some uncertainty in the market. Okay. The weekly jobless claims, though, falling to 233,000 is less than expected on the weekly. So this is a positive sign for the labor market after having some negative news recently. Okay. The 233,000 is a decline of 17,000 from the week's previously upwardly revised level and lower than the Dow Jones estimate of 240,000. So 7,000 less than the estimate. Okay. Still, concerns escalated last week on Friday's non-farm payroll report, which shows the increase of just 114,000 in July. Unemployment number came out on Friday at 4.3%. That triggered what's called the SAM rule, SAHM rule, a gauge that suggests recessions by measuring changes in the jobless rate. We covered this on Knowledge Brokers Friday at length. You can go check out the conversation if you're interested in it. So that's where most of the concerns are coming, that the economy actually isn't that strong, because every time this SAM rule gets triggered, we go into a recession. The rapid, or the I don't want to use the word rapid, but the way we've increased unemployment from 3.5 to 4.3 in the period of time that we have done it is triggering that SAM rule, which is triggering this recession talk. We don't know if there's going to be a recession. I'm not guaranteeing there's going to be a recession, but this is what is triggering that type of discussion and uncertainty right now in the market. This jobs report on the week here would obviously, despite it obviously going up here over the year from where we started the year, this little tick down on the week is a good sign that maybe the labor market is stabilizing. Certainly still softer than the beginning of the year, which is good news for the Fed. They don't want a heating up job market. Okay, what is heating up right now? Unfortunately, today is the 10-year Treasury off of that news, right? That's why I always say, if you're hoping for 5% interest rates, you're hoping for a lot of people to lose their job. If you're hoping for 5% to come through in the short term, that means a lot of people are going to lose their job in the short term. When you have a better than expected jobs report like we just had, then you have a 10-year that goes up pretty quickly, as it did this morning. We're almost at 4, maybe even going to cross 4%, depending on the rest of the day. It's one of the reasons why the last 2 days we've been erasing those gains on the 30-year fixed. Okay, yesterday we came in at 6.58 off of our low Monday at 6.34. It's almost a quarter point up from where we were Monday. The opportunity to tell everybody about locking in was Monday. 6.58, still better than 7, no question about it. The weekly last week it was 6.73. Hopefully we'll get a lower weekly when it comes out later today. But we're probably also going to have a higher daily read. So if somebody's locking in today, they might be locking in closer to 6.7 than the 6.58 that was yesterday, unless they're doing it this morning before that read comes out. So 30-year fixed trending up a little bit. All right, I had a previous question. I don't know if Jeff had any response there to the CME data that I shared on that, but happy to. That's the comment I responded to.
That was it. Save my comment. Probably.
Oh, save my comment. Right. Jeff, we are going to do a screenshot of this comment right here, Bobby. Put the comment back up, screenshot it. I hope, I do hope you're wrong, by the way, because I do want a rate cut. But I'd love to come back on here and say, hey, look at this. Jeff from the Hot Sheet group, he went out on a limb, bucking the CME group and basically the entire market, who says there's 100%. This isn't me saying it. I'm sorry. This is just, they're saying 100% chance rate cut. I think that'd be hilarious. I would put that everywhere on every single social. Like, dude, this guy Jeff nailed it and said there will be no rate cut. He was the only one that called it. He is now I would consider you the oracle of rate cuts if that were to be true. And we will refer back to that screenshot should it be true. Should it come out true. All right, and then we had another comment about the news here on Zillow hiring a new CEO. And so we've got an article up on nowbam.com. You can get all information that you want on what's going on in the real estate market on nowbam.com with no paywall. Yes, Pat asked if he'll come on the show now. I've been in communications with Rich Barton, former CEO's assistant, trying to get him on a BAM interview. Obviously, this is the live tab of the YouTube channel. Subscribe if you're not subscribed to the channel, because over on the video tab, we come out with BAM interviews from time to time. And we've got some great interviews. We had an interview with Spencer Raskoff. Anyways, Jeremy Waxman, who has been there for 15 years, I believe, was promoted to chief executive officer. I'll check out the Zillow stock here too. It was ripping after hours yesterday. They had earnings report that were really good. I'll see where it is this morning here in just a minute. But they had an earnings report, and then they had this news that the co-founder was going onto be an acting chairman, and Waxman was coming up from COO the last 3 years. He's been an integral part of Zillow since 2009. He'll also join the board of directors. In Rich Barton's view, obviously he's a co-founder of the business. He's been the CEO since Spencer Raskoff exited out of the company. Says Zillow's business is firing on all cylinders and performing well through a challenging real estate macro. So in Zillow's view, and their earnings report validated what he said, they are firing on all cylinders. We've built and integrated products, completed strategic acquisitions, enhanced our agent partner network, and leaned in hard on our mortgage and rental businesses.
That's all the business synergy words.
You've got all the synergies. I feel like this is, like who watches Succession or has watched Succession? It's like, we need to release a statement. Okay, let's release a statement to the markets. This is due in no small part to the leadership of Jeremy Waxman, with the past 3 years being a time of particularly impressive innovation for the company. Lloyd, that's the other co-founder, and I could not be more confident in Jeremy as CEO and the caliber of the broader team and Zillow's bright future. So congratulations to Jeremy Waxman for getting this position. Let's take a look at what the stock is doing today. It was oh wow. Yeah. So this is including the after hours, but up 13.7% right now. Big jump for Zillow stock there from where they've been trading. And this is more, oh, I'm sorry. Oh, that's the last 5 days are up 6%. So they had a decline on the sell-off. Now they've gotten those gains back. So in the last month, they're kind of everything they lost with the economic sell-off, they've gotten back here with this earnings report and this announcement for Jeff. They're flat over the month, but they're up 13%, give or take here on the day. Earnings report beat expectations yesterday. Obviously, Zillow shares jumping again on this new CEO and the Q2 report. I'll give you the headline numbers here real quickly. Maybe I'll just go to my Twitter and I'll get them up easier that way because I looked at them yesterday on earnings. MarketWatch is like one of the worst places to get information, but that's different from nowbam.com, obviously, where there's no paywall. Nowbam.com doesn't believe in a paywall. Okay, if you can get the information by doing a lot of research online, why the heck would we have a paywall? I know there are media companies that you can pay a paywall to, but that's not BAM. All the content we have on YouTube and on nowbam.com comes paywall free. If we're going to actually show you or give you the done tools to implement directly into your business, to plug it in, to click it in, that's why BAMX comes into play. We've got code HOT20 right now to get 20% off of BAMX, where we're actually giving you all of the tools to implement right into your business. So Q2 revenue was $572 million versus an estimate of $537 million. I love it when this is obviously more earnings related than CEO. You know, CEO is what it is there. But I don't know if you remember when Logan, Bobby, you remember when Logan died on Succession? Spoiler alert. Spoiler alert. If you're in the middle of Succession, I just ruined it for you. Sorry about that. But anyways, if you haven't watched Succession yet, that is a crime. You're gonna enjoy it either way. But when the stock drops, they're like, that is dad right there. That sharp decline. I don't know that this is Jeremy Waxman, but it is definitely has to do with the earnings reports there. Okay. There you go. Succession, great show. Watch it if you haven't done it already. I didn't spoil really anything. Although I guess I kind of did. All right. So my apologies there. I'll never do that again. That was a psychotic move. All right. There's your hot sheet week. Thank you guys so much for being with us. How long is Hot 20 going on for? I think it's
till the end of the day.
All right. So till I guess midnight tonight. Till midnight tonight. Jump off here. Do it now. Get into BAMX. Our BAMX members are getting 25% off of our events like bammania.com. Again, I don't know if Bobby, if you can share the back end of BAMX real quick for anybody who's just interested in taking a sneak peek. I'll take a couple minutes here to do that. We've got a monthly course that gets uploaded into BAMX. We have bi-weekly office hours, which are live streams into the private community. Okay, yesterday's live stream, by the way, I don't know if you guys were razzing on me or something. I see in the Facebook group, best live stream of all time, the greatest ever. Somebody said, better than any live stream Byron could ever do. I don't know what was going on there with these comments I was seeing. And so you've got the biweekly office hour live streams. You've got the monthly courses. Every single day that we do the hot sheet, you get those extensive hot sheet show notes, as well as all of the charts that we use inside of BAMX. Okay. And then on top of that, you get BAMX in a box. Go to BAMX in a box. Every Friday, we release to you, like last Friday, for example, we had 4 social posts, 2 video scripts, a blog script, as well as an email script, all done for you to download inside of BAMX. This is the best platform for the skills that you need to be the agent of change right now. Use code HOT20 to get into BAMX today. All right. Thank you, Bobby, for bringing that up. Hopefully we get a turnaround here on the 10-year. Looks like it's going up. Looks like the 30-year fixed is going up. Zillow stock is going up for all the holders. Jason says Eric, talking about the broke agent, probably had all his burner accounts posting about his greatness. I don't doubt it, Jason. He is the Kevin Durant of the real estate industry with multiple burner accounts. So no, Eric, the Kevin Durant, he'll love that little jab at the broke agent. All right, guys. Thank you very much. Have a great week. Have a great weekend. Tomorrow, we'll have a new Knowledge Brokers podcast up on the other channel. Later today on this channel, we'll have a new walkthrough that goes live 5 p.m. later today. Thank you and have a great day. Until next time, toodaloo.